Hello and welcome. Good afternoon. We hope that you are well, and thank you for joining us today for this live webinar on Lumina Gold. My name is Jacob Willoughby, and I'm a Vice President of Research and Analyst at Red Cloud Securities Incorporated. Joining me remotely today are Marshall Koval, CEO, and Scott Hicks, VP Corporate Development at Lumina Gold. We'll begin today's webinar with a presentation on the company by Marshall and Scott, followed by a question and answer period. As a reminder, you can type in your questions at any time, and we'll try to get through as many as we can. But before we begin, I'd like to note that there may be some forward-looking statements made in this webinar, and I would direct listeners to the cautionary notes on page 2 of Lumina Gold's corporate presentation located on their website. For Red Cloud Securities Incorporated, I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. Also, we note that this particular webinar does not take into account the situational needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Company-specific disclosures for Red Cloud are the following. In the last 12 months preceding the date of issuance of the research report or recommendation, Red Cloud Securities Incorporated has been retained under a service or advisory agreement by the issuer. And now I'm very happy to introduce to you Marshall Koval and Scott Hicks from Lumina Gold.
Jacob, thanks a lot. Good to see you. Good to see that you're healthy and well. Appreciate all the listeners' time and interest in Lumina Gold. And so what I want to walk you through today is our CANGREJOS project. It's the only asset within Lumina Gold. We had other assets in Ecuador that we spun out into LUMINA'S resources in 2018. But today we're talking about our Ecuadorian CANGREJOS project in southwestern Ecuador. It's the largest primary gold deposit in Ecuador. So Jacob already went through my forward-looking statement slide. Let me give you some background on the Lumina Group. This was a group that was founded by Ross Beatty in the 2002-2003 timeframe, primarily focused on copper. I joined Ross, and a couple senior members of the team also joined in 2004. So I've been involved in all of the companies that we see here. Basically, we raised $275 million and returned about $1.6 billion to shareholders. Anfield Gold that's shown here was rolled into a three-way merger, and it became part of Equinox Gold. So Ross Beatty is the chairman there, and I'm a founding board member of Equinox. A long history of execution, taking large-scale assets, adding value, de-risking them, and exiting for shareholder value. Let's talk a little bit about CANGREJOS itself. CANGREJOS is the top 15 global development project. It's the largest primary gold deposit in Ecuador, as I mentioned earlier. We've done a lot of drilling, so we have about 10.4 million ounces of gold in the indicated category and about 1.4 billion pounds of copper. And additionally, about 6.7 million ounces of gold in inferred and another 0.8 billion pounds of copper. In 2020, we put out a PEA. The PEA showed large production, 366,000 ounces of gold per year, and I believe it was about 45 million tons of, or million pounds of copper. A long mine life, about 25-year mine life, low cost, $604 an ounce gold AISC, net of byproduct credit of copper, and robust economics at $1,400 gold and a 5% discount rate. It had an NPV of $1.6 billion. If you went up 20% on the gold price to $1,680, you've got about $2.5 billion NPV at a 5% discount rate. And closer to today's spot market price, it's about $3 billion. So the project also benefits from excellent infrastructure around the project area. I'll run you through some of that. And we spent the last 6 years drilling, de-risking, doing engineering studies. Quite a bit of the project design in the PEA is done to a PFS level. So let's walk through some of this. So when we look at Lumina from an investment perspective, we think there's a significant value disconnect that represents a really good investment opportunity. If you look at the growth of the resource at CANGREJOS from January 2017 till November, which was the resource that was used in the PEA, you know, the resource grew over 400%. At the same period of time, if you look at the gold performance, it was up 53%. And if you look at our share price valuation, it was up 45%. So we think that this massive gold resource and improved gold prices that we've seen since 2017 have really helped the project quite a bit, and we're significantly undervalued. Part of that's an Ecuador risk, but we think there's a developer risk too, and we believe that there's an upside thesis for the share price of Lumina Gold. Let me just give you a corporate overview. Issued and outstanding stocks, there's 333 million, fully diluted 355 million shares, and we don't have warrants. Those are just options for the employees. Market cap is about 304 million Canadian. We have about 1.1 million cash on hand as of September 30th, 2020. We have a credit facility in place that Ross Beatty put in place in October. 52-week trading range has been between 46 and $1.19 Canadian per share. We have coverage from Haywood, Raymond James, Fundamental. If we look at our shareholder roster, Ross is the largest individual shareholder at 19.8%. We have an Ecuadorian group, entrepreneurial group, that collectively has 18.6%, board and management 9.9%, and Route 1, a diversified fund out of San Francisco, has 6.3%. You can kind of see our one-year closing price chart and volume on the upper right-hand side of the slide here. On the bottom is our camp at CANGREJOS. So Ecuador has progressed significantly since we entered the country in 2013. We acquired CANGREJOS in 2014. We worked quite a bit with the government and Wood Mackenzie to improve the fiscal and regulatory regime in the country. And long and the short of that is there's been substantial improvements in the fiscal regime. It's now competitive with neighbors like Peru and Chile. They've done things like eliminate the windfall profit tax, lower the NSR royalty range to the government. It used to be 5 to 8%. Now it's 3 to 8%. You get VAT tax back after you go into production. But the long and the short of all this is, you know, it has enabled a couple projects to go into production, significant projects. The Mirador copper mine, it's roughly a 60,000 ton per day design. Copper north of Fruta del Norte, and then Fruta del Norte is about 3,500, and I think they're expanding to 4,200 or 4,500 tons per day. It's an underground high-grade mine. You know, both of those projects are roughly $1 billion. Mirador is a bit over $1 billion. So there's been significant investment, and that spurred a lot of the interest in the country. I mean, geologically, it's one of the most underexplored, high potential districts or countries in the world. And that's really brought in players like BHP, Anglo American. In our LUMINA'S company, we have JVs with both of these companies exploring copper assets. Newcrest, Fortescue, Franco, quite a few of the other major copper players and some of the gold players had come into the country. Wheaton Precious Metals did a royalty deal recently, so or Franco has. So we see a lot of interest in the country, a lot of potential going forward. I guess the election that's coming up in February, people are watching that. It looks likely that a center-right or center-left candidate will come into power and continue the policies that Ecuador has enjoyed in advancing and developing its mining sector. So CANGREJOS has a lot of things going for it. It's 40 kilometers by air from the Port of Bolivar. It's got power to site. Obviously, we need to upgrade that to build the project. It's got paved highways within 8 kilometers of the site, ample water. We're looking at a 40,000 ton per day initial project, expanding to 80,000 ton per day. It's low elevation. There's no communities directly on the project. Closest community is about 7 kilometers away, and we enjoy good relations with the community, good working relations. So that's positive. We get a lot of questions about Cangrejos from investors. You know, does the project have scale? Yeah, it's the 37th largest primary gold asset in the world by resource. It's the 14th largest undeveloped primary gold deposit by gold production capacity. And this includes projects that have over 250,000 ounces a year of gold potential production. What about the grade? Yeah, Cangrejos, this is a large-scale porphyry gold copper deposit. So it's got measured and indicated resources of about 0.73 grams per ton gold equivalent. If you look at it from the copper side, it's about 0.5% copper equivalent. So if you look at those type of projects, there's been three lower grade copper projects of that kind of scale and grade that have been put into production recently: Cobre de Panama, Mount Milligan, and Red Chris. So, you know, it stacks up well there. How about the CapEx? The CapEx for Cangrejos is $1 billion. And as I mentioned earlier, Fruta and Mirador are both close to that. Both of those projects have been commissioned and in production as we speak. How advanced is the project? The main Cangrejos deposit has been advanced to PFS or near PFS in most categories. We have a satellite deposit in BESTIA that we added, and that's why we went from a PEA to an updated PEA in 2020. So there's a lot of positive things going for the project here. There's a lot of details on here, but this is the resource estimate. If we look at the base case of the indicated, there's 570 million tons of 0.73 gold equivalent, as I mentioned. That's about 10.4 million ounces of gold and 1.5 million pounds of copper. One of the things I would like to point out here is if you increase the cutoff grade from the base case at 0.3, say up to about 0.5, you don't lose that much gold or copper. So the deposit's fairly homogeneous. It's not that sensitive to cutoff grade. So that bodes well over the mine life for the project. Here's an aerial view of the Cangrejos pit on the right. Cangrejos is primarily drilled to indicated, and then BESTIA is the satellite deposit discovery that we made, and it's drilled partially to indicated, but primarily inferred. And that was a big reason why we went and did the PEA, the updated PEA. So with these two pits, it's allowed us to scale the infrastructure and understand and start to de-risk the development plan for the project. I'm going to show you a cross section through this red line now. So here you can see on the right-hand side, there's the November 2017 pit. It's a lighter gray line there. That was the first PEA was done only on that pit. Now you can see the darker gray line below it, which is the November 2019 resource estimate pit shell. And you can see that it carries over to BESTIA. It isn't quite in one pit at this stage. There is mineralization between the two pits, and you know, they're roughly about 800 meters apart from each other. And further drilling, we may be able to tighten that up and get rid of this little saddle that's in the middle. Anyway, the other thing that's important to note here is there's to the southwest at Cangrejos and at depth, Cangrejos deposit's open, and the BESTIA deposit is open to the north and to the northwest. We did a ZTEM survey, mag and electromag here in the area. So Scott, can you kind of point out where Cangrejos is here? So you've got CANGREJOS and the GRAN BESTIA deposits there. This is a pretty classic porphyry signature. What you can kind of see here is if you look at, there's a yellow in the center where Scott has partially highlighted this area. You can see the pink that surrounds that. That's an open potential area that could lead to further discoveries. It's also, the ZTEM has identified a couple satellite areas that you can see to the northeast of the circle that Scott has there. So the point of this slide is basically to point out that there's further upside exploration potential to this project. So Scott, why don't you go ahead and take over here and walk through some of the PEA metrics and summary.
Yeah, sure. Thanks, Marshall. So, you know, as Marshall mentioned, on a production scale basis, the project looks quite good. You start out at about 40,000 tons per day, producing, you know, about 270,000 ounces a year. And that's the $1 billion of initial capital that Marshall was talking about. And then, you know, we took a phased approach to the CapEx. So in year 6, you spend about $450 million to expand. That gets you up to the 80,000 tons per year. And that gets you to almost 400,000 ounces of production. So, I mean, as most of you probably know, there's not a lot of mines in the world that can produce, you know, 400,000 ounces of gold a year. And then on a byproduct basis, you're kicking off about 50 million pounds of copper at that point. So we start out with the higher grade on average area of the mine life. So about 0.76 on the gold and 0.14 on the copper. So almost 1 gram per ton equivalent material there. You know, the copper credits are pretty key on the cost basis. So, you know, net AISC costs are about $604 an ounce. And, you know, some of the things driving these low costs are the infrastructure that Marshall highlighted. So, you know, cheap hydropower, access to port. Then also those pits he showed you have a really low strip ratio, and that's a key to the deposit. You know, it's about 1.1 to 1 strip ratio, which is very good when you look across open pit deposits. And then, you know, lastly, I guess on the NPV, you know, basically, I mean, consensus long-term right now is around $1,630 an ounce. So, you know, we're getting pretty close to this 1,680, which is our 20% up scenario. So that's the $2.5 billion US. And, you know, if you think back to that corporate structure slide, we're trading around a $300 million Canadian market cap. So obviously a big disconnect there on valuation. And we think, you know, lots of potential upside going forward. So just on the recoveries here at the project, we looked at you know, producing a doré with silver and gold in it, and then most of the gold and copper and value goes into a copper concentrate at the project. So total recoveries are 82% on the gold and 84% on the copper. So that's the key recoveries there. And then we did some other things in the PEA to really improve on the operating costs. Like we added an HPGR, high pressure grinding rolls into the circuit, and made some other modifications like adding a CIL plant to enhance the recoveries from the previous PEA. So those were big improvements. Just on the facilities here, you know, you see there's I'll start in the north, there's the dry stack tailings facility. You know, we went with dry stack here. It was comparable on an economic basis, and obviously we think it tightens up the project a lot. It makes the permitting easier. It helps with recycling water. So, I mean, this is a big benefit to the project longer term. We've got the 2 pits here. A primary crusher and an overland conveyor to the plant site, and then the waste rock storage facility here. So when Marshall was talking about the mineral resource size, you know, we're obviously over 1 billion tons of resource here, but this mine plan and this pit only contemplates about 640 million tons of that coming into the mine plan. So, you know what, there is potential as prices continue to rise here to look at a substantially larger project, but the one we scoped right now uses about, you know, call it 60% of the resource tonnage. So, you know, when you look at this project across all the available, you know, projects from a development point of view in the world, there are a couple things stand out. I mean, one, it's the 14th largest, but two, it's the 5th largest that's held by an independent developer. So when you look at these yellow bars here, those are not held by majors or producers, and that positions CANGREJOS, I think, very well as majors look to buy reserves that they can't generate through exploration. I mean, it'd be very hard to go and generate 17 million ounces of resources through exploration. And, I'm not sure if Marshall touched on it at the start, but it was kind of implied by the Lumina Group slide. I mean, we really are focusing on setting this company up to be sold to a major or a mid-tier that would look to build a project. It's not the strategy to build this project ourselves. And we think that we've created a very, very unique and interesting project here that most majors would have to look at. Just on valuation, we appreciate you guys all look at a bunch of different names in the space, and there's obviously the Western world names that are a little bit lower risk in the sense that they're in better and more established mining jurisdictions. But we think Ecuador is going to continue to improve, and we think the discount that you see in the market is just too large. Right now, we're seeing about a 30% discount on the averages for valuations in the Western world versus Ecuador. We think that'll close over time, and Solaris is a large outlier in this data set right now. Obviously, they've done phenomenally well, but if you took out Solaris, that discount would probably be closer to 40% looking across the rest of the Ecuadorian names. So, we think that that's going to close up over time. And, we expect, as Marshall said, see, a center right or center left candidate come out of the elections. And we think that post the election, this discount will close. Lastly, just kind of another way to look at valuation here on ounces in the ground. I mean, we traded about $11 per gold equivalent ounce in the ground right now, and obviously, have a very large scale resource when looking at these peers. So the peer average is about 89 on this set, and I'm not saying we'll get to $89 an ounce in the ground, but the point being, I think we'll continue to see this valuation true up over time, and obviously makes it more appealing as a takeout target as well when producers are looking across the space. Marshall, do you want to talk about some of the community programs that we're doing around the project and what we're doing on that front?
Yeah, this is really a cornerstone to the company. I mean, if we don't have a social license, and this goes with all of our group companies, you can't operate. So you have to be responsible, and you have to do a lot of engagement and communication and have transparency with the communities. And it's easy to talk about those things, but you have to do it, and it has to become part of your business plan on a day-to-day basis. And sort of through this COVID pandemic, it's kind of interesting because there is government health agencies within the area, but they're not particularly strong. So when COVID hit pretty hard, it became companies like ourselves that became the primary information, health, and support sort of conduits for these communities. And we had over 5,000 meals delivered, sanitation kits. We did a lot of stuff. We helped the communities kind of understand what was going on in COVID so that they could keep healthy themselves. We have these greenhouse programs where a pretty significant greenhouse that we put in place with the community as a cooperative sort of deal, so that it's primarily banana and cacao and some limited cattle grazing in the area. But it allowed them to grow vegetables, and not only for their own consumption in the community, but also to sell some. And, a lot of the elderly residents in the community helped with that. And then we collaborated with the Ministry of Health. And we've, and you can see in this picture here on health, we did a lot of personal protective equipment for the communities. And, we're in and out of the community every day. The other thing is obviously work is a key important thing with the community. We try to hire and source as much employment and goods through the community. We've done a lot with revegetation reforestation in the area. And part of the lands that we acquired, the surface lands, had historic sort of grazing and you know, a little bit of firewood cutting and that sort of thing. We've gone back in and worked with the community, hired community members to reforest the area. And that's included things like habitat restoration. You know, we've got areas where you have howler monkey sort of populations that with some of the clearing that's happened historically, you have these islands of habitat. And we've done a lot of work to reestablish those corridors so that they have a broader habitat range. It's healthier for the environment, and they're kind of one of the key species. And as they become more healthier, a lot of the other species in the area become healthy. So, you know, we've done a lot of work in that area, a lot of water monitoring programs and a lot of environmental and ecological studies, helping them with compost, that sort of stuff. And then really education and entrepreneurship are the things that we've worked with the community significantly. And, you know, we go in and we listen to what the community needs are, not what we think the community needs. Along those lines, particularly with the COVID situation and having to quarantine or to socially distance, one of the things that the community felt they needed was a better outdoor space where they could exercise, and particularly with the school children age. So we help them enlarge and build a nice sort of outdoor sports facility. So, you know, these are the kind of things that we've been doing on a regular basis with the community, and we'll continue to do. So what do we got left here, Scott? Oh, here's on the upper left is a picture of one of the greenhouses that we put in place. This is for the vegetables. We have greenhouses also for reforestation programs. You can see on the upper right here, some of the elder population in the community are pretty proud of the vegetables that they produce. So we have a botanist on staff and a reforestation expert that kind of help the community. But really, the community runs this with our support, and it's become sustaining. So that's been a really successful program that we've had. So, you know, in summary, since we did the PEA in 2018, and that PEA was done at $1,300 gold. Subsequent to that, we drilled 40,000 meters. We doubled the size of the resource. Again, we improved the metallurgy and process design. We enhanced the amount of project engineering to de-risk the project as we move it along. De-risk it, add value, and exit, which is the strategy and the business plan for all the Lumina Group companies. We released an updated economic study in June of 2020. You know, we ran you through those just a little while ago, Scott did. And, you know, this new 2020 PEA demonstrates significantly improved economics and a longer mine life. You know, that's the 1.6 billion NPV at $1,400 gold. And the mine life went from 16 years to 25 years. So we're a team with a track record of doing real high quality work, both technically, socially, environmentally. We added value to this. We starting down the de-risking category, and we're looking at an exit. And we've got the ability to monetize these large scale assets if you look at the Lumina Group's history. So we think the project's in a real good position. You know, Ross Beatty came out in January of last year, pre-pandemic, and said he thought the company would likely be sold in 2020. Obviously, the pandemic sort of interrupted that. We continue to permit. We continue to do work on the project in areas that we can de-risk it. And, you know, we look forward to this moving on the development pathway with somebody that would come in, take over, take on the $1 billion sort of initial capital cost to build it and put it into production. So that's kind of what I've got to say. Scott, do you have anything you'd like to add to that summary I just did?
No, I mean, the only thing I'd add, I mean, obviously Ross was at the Red Cloud conference and voiced the same view recently that the company will be sold in the near term. And I mean, the $5 million loan that he put in place there is really to backstop that strategy. So, I mean, that's kind of vote of confidence from Ross that he thinks we'll be able to execute on that strategy.
So Jacob, I think that's kind of it. You know, we just hit 30 minutes, which is what we're trying to do. So over to you.
Well, great. Thank you both for that. It's very informative, and we have several questions to go through. So in order here, the first question is regarding that vote in Ecuador that is coming up in February. And this participant is wondering if you think that has been something of an overhang for potential acquirers of the company. They're waiting to see that election outcome.
Yeah, it has for some companies. Some of the companies that we've talked to, that's been a consideration. So, you know, the vote is the first round. It's a 2-round system. If you got 50% plus one vote, it would be the first round, but that hasn't happened for quite a while. So that's on February 7th. The second round is in April, and then the new president would take office in May. So right now, the center-left candidate, Andrés Arauz, you know, he's come out generally in support of mining. The center-right candidate, Guillermo Lasso, who seems to be in the lead in the polls at this point, has actually come out with a mining platform. Both of those candidates realize that mining is a significant aspect of the economic cornerstone of the country going forward. It's been a petroleum-based economy, and that's really sunk quite a bit. I believe last year about 12% of the GDP of the country was related to the mining sector. That was a statistic we saw earlier, which kind of surprised me, but it's significant. The only outlier I'd say to the election is the center, or not the center left, the leftist populist candidate, Yaku Perez, who's an indigenous leader. He's been polling down around 13%, where the other two guys have been up in the 30s in that range. That's the only wild card in the race. If he were to get elected, he's campaigned anti-mining. So, you know, there is some political risk, but, you know, from what we're seeing and what we know, and we deal with this on a daily basis, it's likely Arauz or Lasso.
Mm-hmm. Yeah, so they have a very similar election system to Peru.
Exactly.
Okay. The second question from a participant here is asking about the very obvious value disconnect between the NPV of the project, even at the old numbers, versus the fact that you've grown the resource since then, and the gold prices and copper prices have increased. And they're wondering, what do you think investors are concerned about, or what are they missing?
Yeah, I mean, I think one of the biggest things they're missing, a lot of people don't dig deeper, is kind of the economics around the project and the strip ratio. I mean, the grade is definitely lower, but I mean, if you looked at, say, Cote in Canada that's getting built, you know, the strip ratio is less than half of that. So you have a lot of wiggle room because of that factor, and also just the infrastructure. I mean, having to only truck copper con, 40 kilometers to port, all those things, really help the economics. And I mean, the Ecuador aspect has definitely weighed on the valuation, I think. Obviously, Lundin got going there in country, and then COVID came, so they had to put the mine on pause. And the other operating mine, Mirador, people don't have much visibility into, given it's a Chinese operation. So, I think people kind of continue to wait to see Ecuador prove up. But I mean, Lundin's put up 2 great quarters in a row now, and I think they're demonstrating that you can build and operate there. But it's still early days in Ecuador as a mining jurisdiction, so that has weighed on it. But I encourage any of the people listening to take a digger deep into the technical report, and I think you'll see that the project has a lot of elements that are desirable.
Yeah, and one thing I'll add to that is, in the project design, we're fairly conservative with our mine plan. And what we did is the pit limiting shell, we used $1,100 gold. And so that was a key aspect of it. And in the economic mile, we applied the $1,400 gold. But the production schedule in the NSR cutoff grade were based on the $1,100 pit limiting shell. So there's some conservatism in there as well.
I have to admit I didn't realize that was the NSR cutoff for the pit. That is very conservative.
Yeah, that's a pit limiting shell, and then obviously we use the NSR at the $1,400 as we scheduled. Yeah.
Right. There's another question here asking specifically about the company being sold or the project being sold. You both touched on Ross Beatty's comments, and I would give him a free pass for 2020. I think most of us didn't predict a lot of the things that happened in 2020, but this participant is asking if, for example, we go through 2021 and you don't see a sale, would that change your strategy, or how would you react to that?
Yeah, so basically what we've done as part of the PEA is we scoped the PFS, right? So if we didn't see an imminent sale, we would look to continue to advance and permit the project and move to a full-blown PFS on the entire project. That's about a $13 million exercise, with about half of that, sort of say $6.5 million. It would be drilling GRAN BESTIA and the remainder of CANGREJOS to indicated, so that you could use that in the PFS. And then you would continue to optimize metallurgy and some of the engineering design and that sort of thing. So there is a plan B, and we're actively continuing to move the project through the permitting sort of stages with the data collection, baseline studies, all those sort of studies to support permitting the project.
Yeah, and then on plan A, I would say, we sized the loan that Ross put in place to last us well into Q2. So we're focused on a first half of the year transaction if we can make that happen in this obviously difficult travel and work climate right now. Yeah.
Okay. There's an interesting question here. Interesting to me. Somebody asking if there are any potential negative elements to the decision to go to dry stack tailings.
Well, so negative elements, that's a pretty broad statement. So when we look at it, let me talk about the advantages to start with, and then kind of work towards that. So even though there's a high rainfall area in Ecuador, we're in water supply isn't a significant issue for the project. We're looking at recycling about 85% of the water from the dry stack tails. The site where we have the dry stack tailings facility in is really well suited for it, because it's a deeply incised, a broad valley, and then its outlet is keyed into some major rock outcrops that are pretty significant. So you can key the toe of this thing in, and if you look at it from a failure scenario, which you look at what's happened in Bernardino and the Brazilian scenarios where you've had run out of these conventional tailings, upstream tailings dams, the run out of a failure has been kilometers, and it's been devastating. The run out analysis that we did with the dry stack is very limited. It's somewhere on the order of 500 meters, and there's a choke point where these outcrops come together where the toe of the facility's keyed in. So those are the kind of advantages. We actually looked at within 25 kilometers of the pit, all potential tailings facilities, a conventional wet tailings facility, Rockville Dam, Centerline tailings facility, and there are other potential sites out there. What that tended to do was elongate the footprint of the project. You're in steep terrain, and these other tailings sites are primarily at lower elevation. So you've got to pump tailings down. You've got to recirculate water. And when we looked at it from a capital and operating cost scenario, the dry stack stacked up pretty well with conventional tailings. Now, as far as management of the tailings once you build them, with the high rainfall area in moving into the rainy season, you have to put raincoats, geomembranes over portions of the facility. So there are some operational challenges. I wouldn't say they're negative, but there's management issues you have to do to run this type of tailings facility.
Yeah, I mean, personally, I would say that in general, dry stack is a little bit more on the CapEx and a little bit more on the OpEx. But I think certainly most mines are going to eventually all get to dry stack. And especially being in a heavy rainfall area like Ecuador, if you don't do dry stack, you're really running the risk of having a really significant rainfall event that ends up, causing a serious dam breach.
Yeah, I mean, most of the newer and revisited projects in Brazil, for instance, which is a higher rainfall area than where we're at in a lot of places, they're looking at going to dry stack. I think there's overall the benefits outweigh the risk. And what's happening also that is pretty important is the filter press plants. Those have really, the technology behind dry stack filtering is really improving dramatically, and the costs are being driven down by larger and larger units. Like in our filter plant, we're looking at 7 square meter filters, a stack of 158 of them in, about 8 different cells. And that's even being surpassed now. When we did the study, that was kind of the larger filters out there, and it's really evolving quickly. So I think that'll drive the cost down quite a bit. And I think overall, from an acceptance and permitting perspective, it's probably a better approach, given the failures that have happened. Jacob, that's kind of my view.
Yeah, I would agree. I had a couple questions that popped up to me just in listening to you present. Could you maybe provide some of the near term, say 2021 catalysts that shareholders could look for?
Go ahead.
Yeah, I mean, this is a bit of the problem we're in, obviously, with the strategy we've chosen, which is, to pursue the sale. And obviously, the PEA was kind of the last big news item we had. We're doing some other things on concession side, permitting side, as Marshall said, but I think the next catalyst is the announcement of a transaction. Unfortunately, so we do sit in this lull, and that's part of why we're out here today. Obviously, is to try to encourage people to come into the stock, with that in mind. And we think the downside's limited because of what we've talked about already on valuation. So if Plan B does become the case where you end up doing a PFS, we don't think there's a lot of downside for investors, and we think the upside is a potential sale.
Right. There was another question here from a participant asking, what are the drilling plans for this year? I can't recall if that was discussed in your presentation.
So if we did do a Plan B in the PFS, we would do an infill program at GRAN BESTIA to take that to indicate it. So that was the $6.5 million that Marshall mentioned out of the $13 million for the PFS. And then we'd probably do some step out drilling up on that ridge line where Marshall commented that it was totally open to the northwest if you were to do a drill program. But again, given kind of the strategy of trying to sell the company in the near term here, there's no immediate drilling plan.
Sure. Another question from a participant asking about the aspect of having copper as a byproduct. Now, I think it's wonderful having copper as a byproduct for reasons I won't get into, but the participant is wondering, has that been a negative in the eyes of any of the people you've been talking to, or is that something they actually appreciate?
I'll go first and I'll let you comment, Marshall. I mean, I think it's been a positive. I think it's widened the base of potential buyers, especially if you look internationally. The concentrate we're producing on the copper con side that contains a lot of gold is a very clean con as well. So it's desirable. It's something that, people could use as potential to blend because it doesn't have any, negative deleterious elements in it. So it is, I think, a positive for the project.
Yeah, I think that kind of sums it up pretty good. And I think the only other thing I'd add to that is you've got majors, you know, like Newmont's and Barrick's, and they're moving towards their copper strategy. So, you know, it's significant.
Yeah, and it's hard to get a mine that's going to produce 400,000 ounces of just gold. It tend to be more in porphyries where there are byproduct credits, as you know.
Yeah, I mean, we looked at this when we did the metallurgy. So, you know, if you look at the whole ore cyanidization, you know, the recoveries of gold were up around 92%. So you could have made the call that you wanted to look at not even messing with the copper, but the copper in the deposits a cyanide consumer. And, you know, long and the short is the economics played out a lot better to include copper as a byproduct. And it represents about 20% of the revenues in the cash flow model. So it is a significant byproduct. And I don't think it would necessarily turn away most gold producers. You may even get some interest from straight copper producers that are looking to diversify gold a little bit. But, you know, as a straight copper project, it isn't.
Yeah, and somebody once told me that gold companies get a little bit better multiple than copper companies. So if a copper company bought this project, they might get a little bit more of a gold multiple, something to think about for them. I think we have time for just one more sort of comment question, which was regarding COVID. And it sounds like with all of the community relation programs that you had, you know, nobody enjoyed COVID, but that allowed you to strengthen and deepen your relationship you had with the communities there. Would you say that's fair?
100%. And also, you know, the other thing that the government did early on when the crisis hit is they designated mining as an essential industry. And that allowed us to really get our COVID protocols in place. And, you know, we actually at camp have doctor on site. In Canada, we have health safety guys that are real keyed into this. And we got all our protocols in place. And that meant everything. That meant in our office in Quito, getting people down to Santa Rosa where the airport is, that's close to the project. You know, it's about an hour's drive. Our drivers, and we had very few cases. We had no cases in camp. Where we did see some COVID was in the rotations when people that were in 30 days in the camp and they rotated out to go home, they caught COVID in their community and they had to be tested before they came in, and we didn't let them in. But, you know, in the long and the short, both in Lumina Gold and in LUMINA'S, where we're actually drilling through all this COVID period, we didn't have incidents in the camp and were able to function, and we had government support. And you had to have what they called safe passes to travel. So, you know, you had to have documentation, and we were able to bring supplies into the communities where they couldn't go out necessarily and travel and get them. So, you know, back to the very first part of the question is it did strengthen our relations with the community, and very much appreciative of the effort. And, you know, it was the right thing to do, you know.
Excellent. Well, I think we'll wrap it up here because we're bumping up on 50 minutes. But I would sincerely like to thank both you, Marshall and Scott, for taking the time to be with us, as well as the audience members for participating in the webinar, especially with all their great questions. And I'll just note that our next webinar for Red Cloud will be with World Copper on Monday, January 18th at 2 p.m., which will be hosted by Taylor Combaluzier, and will include Hank Alphen, the CEO of World Copper. And so that's it. Thanks again, and stay safe.
Yeah, Jacob, thanks again to everybody. Stay safe. Exactly.
Thank you.
Thanks.
Have a good day.